Alright guys, welcome back. Thought I'd shoot out a bit of a different video today. Got blown apart in the markets today on the euro yen. So I thought I'd do something a little bit different. We get a lot of questions about Fibonacci inversion trade. Now, it's not a trading strategy that we teach as such at Trade Empowered, and I'm not going to teach you the rules of engagement per se, but what I want to show you is the process that you want to be going through when you see these strategies or these setups that happen frequently in the market and you're thinking about backtesting a strategy. You want to collate as much information as possible. So what you don't want to do is go all the way through, see something that sets up and you think, well, that happens, when that happens, and you go back and you test it over 100 trades, big sample size, back 5 years, say, and then you're crunching the numbers at the end and you think, oh, well, I wonder what would happen if I just tweak that. How would that enhance it? Or how would this enhance it? And then you have to end up going all the way back and retesting it. Believe me, you don't want to do that. It's painful enough back testing. You don't want to be having to do it twice. Trust me. So what I want to show you in this video is things that you can pay attention to and show you all the filters that you might want to bear in mind when testing a strategy, and then you can become ultra conservative. You could require all of those filters initially, and then when you crunch the numbers you think, well, actually, every time that happens and that happens, I don't need that filter and I don't need that filter, and you can remove some of the filters and become a bit more aggressive and get the same results. But most importantly, you collate all the information in the first place. Like I say, you don't want to be going back and having to test that again. So I'm going to do an example on the pound yen on the Fibonacci inversion trading strategy. It's something that I'm testing as well, and I want to share with you as many sort of rules and filters and information you want to collate whilst you're testing that strategy. So grab a pen and paper. This is a writer downer, as Jason Stapleton would say. Grab a pen and paper, lots of notes. Sit back. It's just a short video really, but lots of valuable information. So sit back, enjoy that, and I'll see you in a minute. Alright guys, so as mentioned in the intro there, what we're going to do is just run through a trading strategy known as the Fibonacci Inversion trade. So lots of you guys ask questions about this, and essentially we're identifying this trade setup when we're in a trending market. Okay, and markets, in this instance, in this example, we're bearish, and when we get these complex pullbacks, this is where we're looking for that Fibonacci inversion trade. So I want to run through with you some of the filters and things you want to pay attention to when you might be looking to backtest this strategy or any strategy. Okay, so I'm going to go through a few ideas for rules for entry into this one, and then it's up to you to add or remove as many filters as you want if you're thinking about testing something like this. So first of all, we've identified that we're bearish here and we've got our little complex pullback, right? So what we want to do is we can start to build out our filters. So first of all, we can bring on a Fibonacci retracement, because if we're looking where we're going to retrace to, okay, we can use our Fibonacci retracement tool where we're likely to retrace to, and you can see we've got that 618 retracement there. So I'm just going to clean this up so you guys can see it quite clearly. Okay, so we've got our 618 Fibonacci retracement. Now that's one filter, so you might say, okay, that's one thing I want to note down. We got that, we're at that level, market's at that level. Next thing you might want to do is bring on a equal measured move, so an ABCD equal measured move, for instance, and you're going to see that lines up in that zone as well. Okay, so you've got harmonic equal measured move, you might note that down. You've got 618 retracement, note that down. Next thing you can do, you can bring on your Fibonacci extension tool and go from swing low to swing high, and look at that, you've got a 1414 Fibonacci extension, and you don't necessarily have to use these ratios, but you might have other ratios that you have to pay attention to and have to hit. before you consider this a trade setup, but this is just an example. So for instance, every time we have this setup and we're trending and we get this complex pullback and we get an equal measured move, a 1414 extension, Fibonacci retracement, 618, that might be enough. Or the Fibonacci inversion, so a lot of you guys ask about the inversion. Well, we use the Fibonacci extension tool from the most recent low, so the low of this last move on this complex pullback to the most recent outside return and back down, so it's inverted, okay? And you can see that we've got that 1618 inversion. That 1618 extension there lines up perfectly with our other kill zone, if you like. We've got the confluence on that level, on that line there, right up at 168.85. Now conventionally the Fibonacci inversion trade is the 1618 inversion, so that is as aggressive you can enter at that level. But what we're trying to teach here is how to note down as many filters as possible so you can collate as much information as possible. Okay, because what you don't want to do is go through just testing the 1618 inversion. Every time it hits the 1618 inversion, you enter at market, and that's how you've back tested. And then you start to look at the results and you say, well, hang on, I wonder if we got an equal measured move on, over 50% of these trade setups, and then you have to go all the way back and retest it. So what we're doing here is we're collating as much information as possible so that you only ever have to do it once, and then you can really optimize your trading strategy. So in this instance, we've got an equal measured move, 1414 extension, 1618 inversion, a 618 retracement. Now you might even look at the RSI and you say, well, the RSI is overbought, so that's another thing I'm going to note down, RSI. And then you might note for a doji candle. So you might look for a doji candle, and as the market goes in, bang, we get a doji candle. So you say, right, we've got a doji candle in this time, and you're noting down all of these different filters every time you do this trade setup. Okay, and you can do it like a tick list. So did we get the 1414? Yes. Did we get the 618 retracement? Yes. Did we get the 1618 inversion? Yes. Did we get a doji candle? Yes. Did RSI go overbought? No, maybe. And you can compare all the results and crunch the numbers at the end. And then the higher the score, you might find the more impact that the trade has. And you can see in this instance had a very high score there. It had all the filters lining up that I have tested. Okay, and you can see we rolled over on a dime, pain-free trade. Now I'm going to go through some target ideas. Conventionally, the target is the 618 retracement. Now I know many guys in the live room take target ones at a retest of the lows because we are trending. Okay, so you might want to test target one being at the lows. Now conventionally, I know lots of guys use the 618 retracement for target ones. I know Jason Stapleton runs through this in his war room meetings in the syndicate. So if you're not in the syndicate, go over and join that for $1 a month. It's you get unbelievable value for money. You're invited to a war room meeting every single day. And Jason Stapleton and Charles run the war room. And this is one of the trades that Jason Stapleton favors. So some of you guys use the 618 for target one, and you'll take target two at a low, or you'll take a 2 at the extension, depending on what type of trader you are. But I'm just going to go for target ones just for simplicity in this video. I don't want to confuse too many people. And once you've worked out target one, the stops are half the measured move of your target. So it's always a 2-to-1 risk reward, which makes it very nice because we always want to be right more than we're wrong. And when we're right, we want to win more than we lose when we're wrong, right? You've got those two key ingredients in your trading. All you've got to do is consistently come in and have the discipline to trade that the same way every single day. So there's two ideas for targets and stops. Again, you might use different filters. You might use an extension-based stop, structure-based stop, and different types of target placement as well. But hopefully you can sort of see that, the sort of things we want to pay attention to when identifying these strategies and we're thinking about backtesting them. So that was it really, guys. So hopefully you got some good ideas there. Hopefully you wrote it all down. If you didn't, grab a pen and paper, go and watch it again. It's only I don't know, 10-minute video or something, and note this down, and then go and have a look. Go and do some research in the markets and do some back testing. Have fun with it. All right, so that's it. Hopefully you got some good value from that video, and really gives you an insight into some of the things you want to be thinking about when testing these strategies. Remember, you want to get as much information as possible, and not only rules of engagement. You want to, filters for engagement. What you want to do is collate as much information on stop placement, target placement. What happens if you use an ATR based stop? What happens if you use a Fibonacci based stop, structure based stop? Where do your targets go? Record 2 or 3 different target positions, and just get as much information as possible. So hopefully you found that valuable anyway. Don't forget to subscribe to the channel if you're not already. Don't forget to comment as well. Below every video, I reply to every comment that I see, so please feel free to shoot a message down there and I'll reply to it when I see it. And if you're interested in coming into the live room, just go to the link below. You can come in free for a week and see really what it's all about. We've got a great community of traders in both rooms, London live room and the New York live room. Make sure you go over and watch a kills video as well. Came out today. Work smarter, not harder. Great video. And I'll see you in the live room, guys. Take care.